So the stock market finally crashed. I've been waiting for a crash for well over a year and a half now. The stock market has corrected 10% down from its all-time highs. And for a lot of people, this is a very, very scary time right now because they've never experienced a crash before, or they had no idea this would even happen. Donald Trump won the election. What could go wrong? So far, year to date, the S&P 500 has fallen 4%. Now, the news, the headlines, the tariffs all make it seem like it's a lot worse than 4%. And that's on purpose. I'll get to that in a second. First, let's talk about the Magnificent Seven. So if you don't know who the Magnificent Seven are, the Magnificent Seven are the 7 best performing stocks that make up the S&P 500, the tech stocks, the household names, the companies that dominate the global market. So I'm talking Nvidia, Apple, Microsoft, Google, Amazon, Meta, and Tesla. So far, year to date, Nvidia is down 14%, Apple is down 12%, Microsoft is down 7%, Google or Alphabet is down 13%, Amazon is down 11%, Meta is up 1% at the time of this recording, but it's down 16% in the last month. And Tesla is down 37%. So Tesla being down 37%, that has a lot more, in my opinion, to do with politics versus overvaluation of a company. So a lot of people probably think the stock market crashed because of the tariffs. And the tariffs obviously played a role because of the uncertainty that's going on in the economy. The reason that stocks are falling, especially the big Magnificent Seven, the largest companies in the world, are falling so hard is because they were overvalued by a lot to begin with. So let me explain. So there exists what's called the Warren Buffett indicator. And that indicator basically tells us how overvalued or undervalued the stock market is to the GDP of the United States economy. So going back to last year, the Buffett indicator, or the stock market to GDP ratio, was about 137% overvalued, somewhere in that range. And I learned this last year through a different YouTube channel called Everything Money. You should check it out, where they teach a process for investing and not just speculating and gambling. Learning that, and historically, that metric is what Warren Buffett has followed to determine when to sell his stocks and be in cash, because it's inevitable that a crash is coming. No one can time the market, but Warren Buffett has, going back to 2000, the dot-com bubble, and going back to 2007, the financial crisis, he did the same thing where he sold a lot of his holdings and went into cash, I think 50% of his portfolio. What followed was a market crash where he was able to gobble up stocks and different businesses for pennies on the dollar when the market inevitably crashed. Last year, Warren Buffett actually sold $100 billion of Apple stock, which he obviously made a lot of money on. He sold it, and nobody else was selling at the time. He was the only one selling. What does Warren Buffett know that we don't know? That's when you look at the Buffett indicator and you see that the stock market was overvalued by 137%. Right now, today, going back to last week, actually, even with the correction of 10% down from all-time highs and all these big stocks falling, we're still 100% overvalued compared to historical valuations. Just to explain this Buffett indicator a little bit more, the Buffett indicator is used to determine if the stock market is overvalued or undervalued, and it compares the combined market value of all publicly traded companies in the stock market, so let's say the US stock market, so the S&P 500, with the total economic output of a country in that same year. In the past, the market has been, 20% overvalued, 30% overvalued, 40% overvalued. We were almost at 150%. We're now down to only 100% overvalued. And the key thing here is whenever the stock market has been overvalued by a lot, what's followed is a period of minimal returns for the next, 5 to 10 years, assuming you keep buying at all-time highs and then the market falls, right? That is how he knew to sell, because of how egregiously overvalued the stock market was. He's holding $340 billion in cash, waiting for the market to fall. And when it does, he will go and buy businesses like it's Black Friday. He'll be buying stocks in the billions of dollars. He was the first person to do this last year, and now the market is falling. More than the tariffs, I think the tariffs just gave a good headline for the market to fall. I think that it was due because of how overvalued stocks were, especially tech stocks. And this happens. This is a normal thing. For me personally, I've experienced 2007. I didn't know anything about investing. How old was I in 2007? I was like 14 years old. So I didn't really experienced that, especially because I'm here in Canada. But 2020, during the COVID crash, I experienced that, but I didn't know. Again, I was just getting into investing. I didn't know, and I didn't really feel that. I think I took advantage a little bit, but I think I was buying instead of having I didn't really have a portfolio to manage during that time. And then 2022 is when I really felt a little bit of a crash. I think we were down. I'll put it up on the screen. The market fell like 20% or something in 2022. 2020, we fell, I think, like 30 something percent. But again, each time the market recovered to all-time highs. On average, what I've noticed and what is based on historical fact, I'll put up on the screen, is stock market crashes usually last about 300 days on average. They can be longer, they can be shorter before we go back into a bull market and head back up again. In those times, just especially going back to 2020 and 2022, just going off of that, these are generational buying opportunities because these companies are always priced especially in a bull market, price to earnings multiple given on these big companies, these fast growing companies are very high, and now they're coming down. And when they are coming down and the companies are still growing at a really rapid pace, is a great opportunity for you to buy them, obviously. If you're new, this is a great chance to dollar cost average into the S&P 500 index because it's fallen, right? For example, VFV here in Canada has fallen 3 to 4% from the all-time high. VOO, I think, has fallen like 3% or 2.5%, almost 3% as well. Now's your opportunity to dollar cost average on the way down because nobody can time the market, but it's about time in the market. The more you dollar cost average, especially on the way down, you're reducing your book cost, your average cost, bringing it lower. So when the market inevitably rebounds and goes back up to all-time highs again, I don't know how many years from now, maybe a year, maybe 2 years from now, your profits or your gains are that much bigger, brought your average cost down when everyone was fearful you were being greedy, right? So yeah, I just wanted to talk about that. I just wanted to come on and make this video. I've been waiting for a crash for a while. I've been buying a few of the Magnificent Seven stocks. I'll make a separate video on that. It's a great time to buy. If you have a huge portfolio, you might be a little bit more worried. It's important to remember that ultimately it's your time horizon, which is the most important thing. When do you need that money, right? If you're young, if you're in your 20s and 30s, you shouldn't be worried too much, right? Especially as long as you're buying these blue chip companies and or the index, the S&P 500 index. We've been through way worse than tariffs. All the headlines that are out there, like the great wealth transfer, this and that. I mean, that's there to scare you. Don't get distracted. I mean, the stock market, you're actually buying a piece of these profitable businesses. Even if the market disappears, you still get a piece of the profits of that business. You legally own shares in that company. Don't read too much into the headlines. Just understand that these great assets are on sale right now. And you don't have to buy them individually, but you can buy them in a basket inside the S&P 500 index because it's fallen a couple percentage points and it could fall even further. Nobody knows how far it's going to fall. Right now, I'm very excited. A lot of people are really excited. It's just about understanding and having the knowledge to know that, okay, this is a short-term headwind. What is actually happening? Is it the end of the world? Is my money going to zero? These companies are still out here producing revenues. A lot of them are laying off people. Unfortunately for those people, they have a lot of pressure to be profitable and to grow. They're going to do whatever they have to do to get through it, especially the biggest companies in the world because they are expected to grow at a high rate year after year after year, right? The Nvidias of the world, the Apples, the Amazons, the Googles, the Metas. But yeah, I just wanted to come on here and make that quick video on what's happening, what you need to know, why the stock market crashed, what my thoughts are on it. I'm going to make a follow-up video probably next week on what I'm doing right now, what I'm buying, what I plan to do during this crash. All right, I'll see you guys in the next one.